Welcome to our monthly real estate market update. And this, what we're going to do is actually review the year, because we now have our statistics in for December 21, as well as the entire year. So let's take a look at that. Going back to the process of how we've been doing this with our chart of month to month. Basically, what I wanted to run down and let you see is that on the Asheville region, new listings and pendings declined a little bit for December. Closings increased just a little bit. Medium home price was $355, average $427, and days on market 89, a little bit longer days on market. And then our month supply said is 1.2. This is pretty true when we break it down into the individual cities and counties of holding that a little less listings and pendings happen in the month of December, and the average and the medium home prices started to climb just a smid. But if you look at when we break down the thing that I wanted to look month to month here before we get into our year review, if you look at Asheville City, the month supply is only 0.9. So we have less than a month supply in Asheville City. Same holds true for Hendersonville City, less than a month supply. So that is significant. And you're going to see when we go over the year review just how significant that is across the entire region. All right, let's just jump into that. Right. Okay. So this is a review of the whole Asheville market region. And remember, these are all the counties that are back here, our entire region. When we look at this to see what's so important is that our outlying counties, which some of these are very mountainous, some of these are less populated, they often do not have a lot of sales going on month to month. So I thought it was really important that we look at them together over a whole year. So in Swain County, our inventory, it's just, look, decline, 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 less, less, less. So over the past year, houses have, even in these extended areas, have been put on the market and sold, and there's just nothing else coming out. You know, and that's maybe McDowell and Burke and Rutherton. You can expect that a little bit because there's not a huge amount of new construction going on. So they just have to depend on existing homes to be put on the market. If you look at Hendersonville, though, the city of Hendersonville lost almost 50% of supply, as well as city of Asheville is 54.3%. That is huge, guys. I mean, we talk about a housing shortage. We are at a critical stage for housing supply in our Asheville region. And unless there's just a huge flux of people who decide they're going to put their house on the market and go someplace else because they're concerned about being able to buy something in the area that they live, there's no way new construction in our topography is going to catch up really quick, because based on our topography, we just don't do a lot of tract homes. The land just doesn't set for that. The build time takes a little longer. Plus, with the labor and material supply shortage, that even takes longer. So it'd be interesting to see what happens in these counties if some of the residential zoning is changed to multifamily, so we can put in some duplexes, fourplex, townhomes, condos. Something's got to change in order for us to get some more housing to come. Now, the year-to-year price change across our region was very significant. Single-family homes increased 15.5% in 1 year, and condos and townhomes increased 17.2% in 1 year. Now, remember, that's taking into account across the entire region. So that is a huge increase. If you're an investor, we always talk about distressed homes and what that looks like, and is that a good deal to take that on? So this past year, 2021, was a very interesting year for distressed homes in our area. In the entire region, only 0.5% of closed sales were distressed. So distressed means they're either in foreclosure or they're pre-foreclosure, which is called a short sale situation. That is incredible. And even more so is that 37.5% less than what it was in 2020. Now, of course, a big part of that is the moratoriums that we had across the board, the being able, the programs that we had to help people that were in distress, just a lot of what's gone on with the pandemic. So, what we wonder is there foreclosure homes that are going to happen more in 2022? Madison County had the most foreclosures with only 1.6% of all their closings. And here's an interesting fact, though, which as investors, and if you're buying a home for residential first-time homeowners, beware of going into foreclosures. There's a lot of work that has to be done. And the increase over the past 4 years of foreclosures have gone 76.4%. And one of the reasons that has been such a huge increase is because people with cash who want to move to our area, who are not investors, they're going to be here for their residential homes, they are willing to pay top dollar to that house that needs to be fixed up and repaired. And if they'll put another $100,000 in it if they can get it at a price that they can at least move into. So the shortage of housing has significantly increased the price of foreclosures. So this was I found interesting statistic. Hang on. Found this an interesting statistic that changes in new listings from 2020 to 2021 increased in most of the region. So more houses actually went on the market. Some of that's new construction. Some of that was people that were especially in Burke County, they were holding off, not going to sell, and then they decided to. But in Transylvania, the number of listings went down, and in Swain County, they went down. And that is because what they had, they just didn't get new buildings to be out there, and the existing homeowners did not want to sell. So part of our severe housing shortage that showed up in the other stats leaned to this fact that there were a lot more houses went on the market in 2021, and now they're sold. Very similar in changes in pendings from 2021 to 2022. Pending sales increased. Again, they decreased in Transylvania and Swain County. Medium sale price from 1 year, 2020 to 2021. In 1 year, the medium sale price increased in Yancey County by 29.2%. Our other outliner counties increased in the 20%. Burke County, 14%. The city of Asheville and Henderson County, they increased, 10, 12, 13%. But one of the reasons they didn't have that dramatic increase is because those house prices were high already anyway. So it was just a general small increment of increasing. Whereas Yancey and Swain and Polk, those house prices had been sort of stagnant for a while, and now people are willing to move farther out from the Asheville township and moving into other counties. All said and done, by the end of the year in 2021, Buncombe County's medium home price was $390 and Henderson County was $350. We're right on par with the national average for medium homes. It's around $355. So actually, if you look at from month to month, when we looked at the year, you could see this increasing across the board in Henderson and Buncombe County. So let's just make a comment here. If you are a first-time homeowner and you're looking to buy in Buncombe or Hendersonville County or Henderson County, you need to know that you need to be in the 350s to the 400s to get a starter home, a 3-bedroom, 2-bath, livable home that, and it's going to be super, super competitive. So I've had a lot of clients that they have $200,000 cash. They think they come in here and buy something in this area for that. You can't. You've got to go out to the extending counties to do that. Average, remember the average is the highest and the lowest divided by 2. They increased all the way in all of the counties. One of the things we're really interested in is what happened with the actual closed sales price. So even though we had an increase in all of these, over the month to month, we see that happened over the year too. So bottom line is house prices rose every month, and they rose significantly through the entire year from 2021 to 2022. So with that said, what is 2022 going to look like? Let me get us out of this. The Feds are going to raise the interest rate. It's going to happen probably next quarter when they do it. They didn't do it this time, but they have to. The inflation is at an all-time high in past 40 years. We're dealing with supply chain issues, labor issues. We are in a point where there's not enough houses for people to live, and everybody's looking for a house. The interest rate, if you're a buyer and you've been on the fence, like thinking that you didn't want to pay your top dollar of what you qualify for, I highly recommend that you just jump in right now and buy before this interest rate increases, because a 1% increase in the interest rate is equivalent to $10,000 of what you can afford. So just know that. If you are a seller, I would jump in there. If you've been hesitating and waiting, where's the highest point? Want to sell at the highest point? I think it's now. do it now. I don't foresee, with the shortage that we have, with as many people moving to our area, I don't see our prices across the board really going down. I think they're going to stay steady because we have in our area an extreme amount of cash buyers. So I think the prices will stay steady. It's just going to be harder for buyers to buy the homes and with the interest rate as they go up. So, you know, in the fall of 2022, we may see nationally some price drops. Our area, the fall is usually very good for us. So we will probably run, 2022 will probably be a year of houses selling pretty much the same as they did in 2021. And then 2023, we'll see what happens. You know, a lot of that will depend on COVID and everything else as well. If you're an investor, you know, it's all about the numbers. If you can make the numbers work, buy it. The thing I do want to caution you, if you're doing a flip, is labor and material shortage, that you need to plan your time. You know, getting in and out in 90 days is a challenge now just to get your materials, much less your labor. So just plan that accordingly when you run your numbers. Materials and labor cost more right now. But if you're going to buy to rent and it's a nice livable house, do it now and get your tenants in there, because there's a significant shortage as far as rentals go too. If you got any questions, be sure to email me, mary@lovethegreen.org. Be sure to check out our monthly videos on market update off of from the blog lovethegreen.org, as well as the YouTube channel. All right, it is a cold day, so stay warm.